According to arguably the best investor in the history of the world, Warren Buffett, if you invested $10,000 into the S&P 500 starting in 1942 without needing to do anything else or listening to people, financial experts, or any advisors and just stick to one index, the S&P 500, and believe that America would win the war and that American businesses would do well, you would have $51 million by 2018. Just this one investment in the business of America would have yielded a 5,000+% return. Don't take this as simple investment advice from the veteran. He actually did this, reaped massive returns, and not only stayed on pace with the return of the S&P 500, but consistently beat it over many decades. In 1942, at the young age of 11, gutsy Warren Buffett bought his first stock with a whopping $114.75. If you invested this $114.75 into the S&P 500, even though S&P 500's ETFs didn't exist in 1942, it would have turned into over $550,000 by 2018. But what if we switch this figure up to $10,000 invested starting in 1942? This $10,000 would turn into a whopping $51 million. While 1942 until 2018 is certainly a long time frame, let's compare the S&P 500 to gold. If you were living in 1942 and instead panicked due to the war and put all of your $114.75 into gold, it would only be worth $4,200 in 2018. If this figure was $10,000 into gold in 1942, this would only be $440,000 by 2018. This return is less than 1% of the return than that of the S&P 500. A simple, unmanaged investment in American business. Buffett is one of the richest people in the world and has created his wealth through decades of successfully proven investing strategies. Let's examine his principles and how they can enable us to generate consistent returns for life-changing wealth. Before we dive into turning $10,000 into $51 million and achieving 5,000% returns, if you like our cutting-edge investment content curated by professionals with decades of entrepreneurial and investing experience, consider subscribing to our channel and join in on our alerts so you never miss our new content. It's crucial to remember that investing involves risks and that exceptional results can never be guaranteed. Warren Buffett's investment philosophies, which are now 80+ years in the making, can provide invaluable insights and a rock-solid framework to guide your journey in investing. Let's look at Buffett's long-term strategy. Long-term investment approach. The term long investment describes a strategy in which people or organizations make investments so as to hang on to them for a long time, generally 7 years or even decades, in fact. Buffett often says he almost always hopes he never has to sell. This is investing in assets with the hope that their value rises over time. Investments such as publicly traded stocks, bonds, mutual funds, and now ETFs, also known as exchange-traded funds, Warren cautions against trying to turn a rapid profit and stresses the significance of long-term investing. You can take the advantage of quality business growth potential by finding them and investing in them over the long term, emphasizing the importance of an investor's temperament because growth potential of an asset over temporary market volatility is a crucial requirement of a successful long-term investment. According to Warren, investing for the long term enables you to benefit from compounding. When the profits from your investments are reinvested and produce additional profits, this process is known as compounding. The compounding effect possesses the potential to significantly enhance your overall investment returns as time progresses. By investing over the long term, you give your investments the chance to increase steadily. Over several years or decades, even modest but steady returns can add up to a sizable amount of wealth. The effects of short-term market volatility are also lowered with the aid of long-term investing. Short-term swings in financial markets are common, and trying to predict these moves are extremely difficult, if not impossible, and dangerous. By consistently focusing on the long term, you can weather market ups and downs since market typically trend upward over time, as the S&P 500 over the last 100 years has shown. It's vital to maintain a long-term perspective for investing and avoid getting caught up in short-term fluctuations in markets, since investors who only concentrate on short-term gains may miss out on long-term growth aspects. Stock market returns may fluctuate widely over a shorter period. In fact, When looking back to May 13, 2022, the S&P had generated a return of 11.51% over the previous 10 years. The year-to-date return at that time, in May 2022, was negative 15.57%. Focus is always on quality businesses. You'll only fail if you buy the wrong stock or if you don't invest in a productive asset. Warren Buffett. Buffett concentrates his investments on businesses which are within his circle of competence, have repeat and recurring customers, are growing, have exceptional management. He overwhelmingly understands his intrinsic value and where he is clear on the financial standing of the company. Warren primarily focuses on businesses that are undervalued relative to their intrinsic value. Opportunities arise when the market has underestimated the value of a company. Figure out everything about the company you're interested in, like Warren Buffett does. Strongly consider these main factors he requires, and if you feel that business you found can outperform the S&P 500, which has been approximately 10% over the past 100 years, then go for it. This concludes our overview of how to transform $10,000 into $50 million. While there are no guarantees in investing, adopting Buffett's methods can be a strong foundation for long-term wealth accumulation. Successful investing requires careful study, awareness of your own circle of competence, and risk tolerance and a decisive mindset. Thank you for watching. Tell us what you think about achieving 5,000% plus returns and turning $10,000 into $51 million by leaving a comment in the comment section below. And if you like our cutting-edge investing content curated by professionals with decades of investing and entrepreneurial experience, remember to like the video, subscribe to our channel, and join in on our alerts so you never miss our new content. Oh, and check out our other popular video